following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We have 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 108. NASDAQ down 40. S&P's off 3. Bottom line, folks, looking at these indices, you can expect a sell-off once again in the Dow coming into this close. This is going to be a really weird close. The reason I'm saying that is this. Yesterday, you had divergence inside the market. The small caps were the canary in the coal mine. They were going south when the Dow was up 240. Bottom line, you had the NASDAQ, NDX 100 come down after them. What we have the small caps down all day long. The NDX 100, the NASDAQ, came right after it, and now they're starting to pick on the Dow. Bottom line, you're up $103 inside the Dow Industrials. If we go take a look at this Dow, when you see from the top to the bottom, what you have out here is that the Dow was at a high today of 26,824. Bottom line, you've only given up 75 points at this point, but guess what? We go over to that S&P, we take a look at the S&P as they start selling into this S&P, which they did just a few minutes ago. Bottom line, this S&P, you know, we just went from a price point of 29.36, just took 10 S&P points off in the last 50 minutes. This baby wants to get right down into the, the 24 mark. It's only a couple more points, but what is game here is going all the way over to 29.19. And that's 8 more points, and that can get there pretty quickly. And the way that this market has been trading, I expect that we're going to see that type of action coming into the close today. Gold and silver got a big bid out here. You had Goldman Sachs out there this morning. Bottom line, you know, I've done the gold report since 2001, and I've never heard Goldman Sachs come into the marketplace, bottom line, pushing gold. But guess what? They're telling people they should. Well, they're giving 3 good reasons to own gold. We'll get into that. But it put a bid behind gold in a big way. You get gold up $14.70, trading 12.06. You get silver up 19 cents, $14.70. I expect what we're going to see inside the gold market, 12.18 to 12.20 is going to be game. Bottom line, we'll see whether they can make it through. That has been a supply line that's been very tough to get through. The bulls and bears fight it out. The bears have been winning for quite some time. Oil's trading at $75.06, still at highs. Bottom line, we'll see where that baby wants to shake out. Notes and bonds. Now, this is where it's going to get interesting. Let's pull up this 10-year note. So, 10-year note, trading up 5 ticks. 5 ticks, not a huge amount, but guess what? The volume is. We're at 1.4 million already. And that's normal volume for a 10-year. Bottom line, 10-year likes doing 1.5, 1.6 million. You're going into the 119 area. And we have volume up there, so I expect we're going to hit it. The 30-year, what the 30-year had done is that the 30-year went back to its May lows, rejected the May lows, and we got monster volume here, too. You're talking about 342,000 contracts. That is big contract volume inside the 30-year. So I expect what you're going to see out here also is that the 30-year right now is trading at a price point of 140.18. And the number to if the 30-year or when the 30-year gets back inside 141.04, Okay, remember, it's 32 ticks and a point. So we're talking about, what do we get? 12. We get 16 more ticks. 16 more ticks would get you inside the higher range. And then, man, you'd be off to the races, because the bottom line, it's still hard to wrap your head around when the Federal Reserve continues to say and do going up on short-term rates. But guess what? The note and bond market, there's still more buyers than there are sellers. King dollar. What do we have with King dollar? King dollar right now is trading up 219 ticks. King dollar had been up to 95,390. Right now you're at 95,135. You have some decent volume. 24,000 contracts is decent volume in good old King dollar. The real question is going to be, it failed thus far at the last swing point, which is the 95,290 mark. Big action all over the place out here. And if we go inside the gold equities just for a second, what you're going to see is this. I expect we're going to get follow-through, folks. One of the reasons that I expect we're going to get follow-through is a few of these gold equities are starting to do ABC structures on the way up. If you take a look at an Eco Eagle, just blew away its B point, has volume on the move. The B point on an Eco Eagle is 1.6 million shares, $35.51. You're at 35.72 and you get 2.3 million. Bottom line, that saying a good old Eco Eagle is going to be running up somewhere into the 37.50 mark. The real key is, let's go to Royal Gold. The key is that when you start taking out swing points, you have volume taking them out, then you know you get action top side. If we go to Royal Gold hasn't come into its swing yet. It's getting into it, though. It's getting next to it, and it's getting some decent volume as it's coming up into it. With 312 million right now, that would have to 312,000 rather. That has to get over 472. Now I don't expect that's going to hit that today, and you don't want it to hit it today, if in fact you're in that market, because what you'd like to see is that you'd like to see them taking a swing point out, taking that swing point out with volume behind the move. Some of the higher volume equities out here, this is what we have. You have Advanced Micro, that's down $2.40, trading 29. And if you want to see something that, you finish ABC structures on the way up. This was a dynamic on the way up, no doubt. And guess what? It finished at ABC. In fact, it's extended ABC at $34.14. Now you're coming off the high. You're breaking the high consolidation. This baby wants to come back down somewhere into the $24 level. Right now, you're at $28.99. Stitch Fix, that is the stock of the day getting smoked. That's down $15, trading $29. It has volume behind the move. Bottom line, they came out with their numbers. Numbers didn't look bad, but their growth slowed down, and that's what the market is looking at. This was an equity that went public at $15 last year, expanded all the way up to the $55 level. Bottom line, it gets taken apart. And what you do have with Stitch Fix now, this is volume off the highs. So $24 is game, and actually right down to $18 is game. So there's going to be there already is some disaster behind that move into lower price. Dow Industrials right now are up 98. NASDAQ is down 42. S&Ps are off 3.5. Stay right there, folks. We've got our man, Mr. Basil Chapman, coming up next. Going to growl and prowl with you.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 94. NASDAQ is down 46. S&Ps are off 4.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil has an outstanding show right here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, the opening call. Now, the way you get the opening call is come over to our website at TFNN, hit newsletters. Bottom line right there comes with a 30-day money-back guarantee. Basil Chapman, what's going on?
Hi, Tom. How are you doing?
Doing great, man. Yourself?
Very good. Thank you.
Cool, man. So, I got your chart up. I got the Dow Industrial. It's the only one that wants to stay at a high, it looks like.
Yep, and thanks to Boeing, now maybe there are 1 or 2 others that are helping, but Boeing is a big percentage of this. And I really don't like to see that, because if Boeing was there and was helping the Dow, that's fine. But then I would like to see the S&P making a new high as well. I'd like the Qs very close. And I don't like to see the divergence between the very weak Russell 2000. So this is something that we need to watch closely. It is a new high. That's very good. We've sort of stood by the last day or two just watching this, because in my 120-minute chart I showed in my show this morning, we'd made a peak C in that 120. We're always looking at that 4th highest peak, peak D. We've got that now. So things are lining up that we've got to be a little cautious here, because it is very positive that in the long term, we've actually gotten close to 27,000. I showed a study that I'd done on the long-term chart that I mentioned I would send to anyone who's interested. In fact, let me just pull it across here. And that shows you from the low that was made, if you don't mind, I've just got it over here. From the low that was made on the crash of October the 19th, 1987, at that was 1663, and we've run up all the way. There's this light blue line, dashed cyan line, and I like to put what I call an inside track, so within a little bit like a narrow up channel. So it goes right to the exact high of 2007, and then it pulls back sharply. And then the price, I always like to look at trend lines or moving averages or gaps, as if don't worry about it at all until you start getting closer and closer. Well, look what happened. In January, the Dow went right to that line at 26,616. This is a very long-term monthly chart going back to 1986. So all of a sudden that line becomes important. We pull back, make a V-shaped recovery, and we go to a slightly higher high. And today we went even further, but we're up against that trend line. That trend line actually depends which month, because it's a rising trend line, goes to 27,200. So this is the chart. If anyone's interested, I've given a kind of an analysis of what I'm looking at. I'm not making big projections here for 2019. That's going to be another chart. But this is really a very important moment, and there are a couple of reasons why. Within the time frames, if you're looking at the usual September to October weakness, which we actually haven't had for 2 years, but it's historically a weak time, we've been holding quite well, but only in certain areas. I'm going to move this away. And we can see that if you look at the QQQ, that's the index 100 trading vehicle, in the weekly chart, bumping up in that Chapman wave inside track repellent zone. If you look at the IWM, which at times over the last year and a half has been a leader, all of a sudden in the monthly chart, look at this. And I'm always surprised at trend lines. I get this from years ago when I used to hand chart, and then I'd draw a long trend line, and then it would disappear. And then one day when I came back, I said, oh, there's that trend line. Look at this. This goes back from the low of 2009. You can start an up channel. And where have we been repelled? Back in 2014, 2015. And all of a sudden back here, it went fractionally above, and now it's below. This long, you see this green trend line. So I'm looking at this cautiously, because it's a very whippy phase with individual stocks doing well. But when you start to see, I've got an index that I call Cash, CASH. If you look at Cintas, I spoke to you the other day about it. Look, it hasn't even bounced. Look what it's done off the low. It's not doing anything. Something's wrong. If that overall is uniforms, rentals, that to me is a warning. And then A is for Amazon. All of a sudden, Amazon is failing to go to highs. You can see right here, look at that trend line. It got repelled from the high that was made on the 4th of September. So it's not weak or anything, but it is starting to fail to accompany like the Dow with new highs, or even the Qs to new highs. And then the SPY is my other one. SPY is right here. Failed to make a new high. The Dow did, but this stopped right the other day, the 20th of September at 293. And the last one is Home Depot. And Home Depot should be doing very well right now, and it's starting to turn down. So I'm saying this is a period where we still actually have long positions. We still have United Technologies doing well. The NASDAQ, IBB, biotech sector, we still got that, still long. You know, we're still long the dollar, and this is going to be fascinating, because here we are. Look, even with today's big move in gold, the dollar's holding well. It's up. I've got it up 19 cents right now. The MACD and Stochastic are all very good. And when I put it together with the gold, I'm just wondering, probably you'd have a good answer to this. Why is the euro, which usually it doesn't track with the gold, but very often when the dollar's weak, you'll see the euro rallying. It's not participating here at all. It's still very weak. So I'm kind of cautious, and I think you have to be very selective. As I say, we're not afraid to go long with stocks that really, we still have our steel stocks doing very nicely. Just added another one this morning in the shipping area, because that's always a very late cycle. Shippers, they only get the big orders when everyone's convinced everything's good, by which time anything can happen in the market. But we'll see if that can continue. I'm just a little cautious right here. We haven't got any short positions, but I'm looking at even the semiconductors. You know how long I've spoken to you about semis leading the way up? They just stuck. They had a real good intraday move to 108, and now they're at 106.75 in the SMHs. So something's not right with this picture.
Well, you know what's interesting is that I'll get the volume after the close tonight, but I don't have it right now. But it looks like the transports are an ABC down. They broke the swing point with conviction, you know. So. With conviction
and awful high. I must admit that it's off an all-time high. But look at the airlines, and of course that's because of the huge move in crude oil. Look at that from the airlines.
Actually, when I look at the IYT, this is going to be an ABC down. That's an ABC. It's breaking it with volume. Yeah, 203.08. Yeah. We've done 281 it's going into 218. So that means the transports, when I actually get the transports tonight, more than likely it's going to have the volume. So that's a problem for Dow theorists for sure.
Yes, it is, because you like to have them both going to new highs at the same time or very close together. I'm watching this very closely, but back at the ranch, I think it's still, don't have to get excited. If you've got stocks that are working well for you, you don't have to sell everything. Just take a little bit off, take some cash. I think building some cash position, I don't think that's a problem. There's still some stocks that are acting very well, but all those favorites that I was looking at before are starting to pull back quite sharply.
And folks, the way you get his newsletter, come over to our website at TFNN. You just go into newsletters, you'll see the opening call, comes with a 30-day money-back guarantee. And, of course, don't forget, every trading day right here, you can listen to him noon to 1 Eastern Standard Time. Outstanding show. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down up 103, Nasdaq's down 43, S&P's down 3. If we go over to that IYT, we're just talking about the transports. Now, this is the ETF structure. Let's take a look and see exactly what's in here. So, okay, so the holdings. Okay, so here we go. FedEx is 12% of it. Norfolk Southern is 9%. Union Pacific 8%. JB Hunt. So, get 2 railroads, FedEx, JB Hunt's, transport, big transport. United Parcel, Kansas City. Okay, Robinson Worldwide, then United. So check this out, folks. This is an ABC down. It's breaking the B point, breaking it with volume. Let me take a look at this. Okay, so your A point up here is the high, 209.33. Your B's 203, so basically $6. Your C was yesterday. Okay, that's a price projection of $200, and yeah, this is cool. 200 is your swing point. Now, what happens here also is that $200.99 is where we broke out from. So this baby has volume. We go over to the transports. I'll share in this index. On this index, what happens? The actual index. I don't get the volume until after 8 o'clock at night. TRAN. Whoops. So I'm just curious as to where we think this can go. Transports. Whoops. What am I hit that? What am I doing? I do this all day long. How do I not? There we go. Okay, so transports out here. We're down $109. You're off a high of 11,623. You're 11,299. You're breaking a swing of 11,290. Right now you're to 298. Let me put this. Okay, so I'm going to actually put this on a weekly so I can get a clear picture of it. Oh, this is going to get interesting, man. Okay, so well, this is game down to 11,052 first. We'll see where this shakes out. But if we get volume down there, then you're talking lower price, you know. So bottom line is that you know, the Dow is one thing, but the bottom line is that what you do have out here is that those transports want lower price, which in itself. So if we go over to the Dow Industrials, let's just take a look at the Dow. You're going to see inside the Dow, it's good old Boeing that keeps. Nah, well, not just Boeing, but Boeing is the largest part of it. There's no doubt about it. Okay, so inside the Dow today, you're up $114. Boeing's putting 30 points, 3M 21, Caterpillar 17, Intel 11. Taken away from it, Home Depot 17, Nike 12, Big Mac 8. Nothing heavy, actually. Bottom line is that we'll see whether those big caps can keep moving forward. If we go over to some of the higher volume equities and take a look at see what we have happening out here inside, let's do the S&P, the higher volume equities inside the S&P. Advanced Micro, we're talking about, that's down 250. General Electric's up 25 cents. That's trading 12.34. Don't touch that stock. Facebook is down $3, 159. So Facebook is $10 away from that 149 area. That 149 wants to get hit. Apple's up $1.82. You get Comcast flat. Oracle's down $1.60. Let's go take a look and see what's been happening with Oracle. So database software off the high. Man, this is a fast sell. When they sell these, man, they're selling them fast. So in 6 hours, Oracle just went back to the September 20th time frame. And when they start unloading these, man, they start unloading them big time. Let's go take a look at the big dogs out here. So Amazon down $27. That's going to be, oh, now this is interesting, okay? This is subtle, but this is what you have, folks. You do have an expansion of volume. Let's see, did we test the lows of the highs? I think we did. 2013. Yeah, we did. Okay, so check this out. So Amazon has had a decent high volume high. That high volume high, the low of that high was 2013 bucks. The high was 2050. We did 5.7 million. We tested that yesterday with 3.4. Now here's the kicker, and this is where it gets subtle. You're coming off of that with 4.4. That's saying, bottom line, Amazon number one wants 1865, and more than likely what we're going to see, 1865 at this point, because 1880 is going to give it some support. We'll see how that shakes out. Bottom line, though, that's lower price. Let's go take a look at Google and see what we got with Google. Google's just having a hard time holding higher price. That's up for $4.24. Facebook, I think Facebook's going to continue to have some big problems here. That's what it looks like. You know, Facebook, number one, can't hold price. You're down from the highs of 218. My take is that it wants to go to the 149 to begin with. We put this up, you're going to see 149 sticking out like a sore thumb. That's a high volume low. That was the low that was established in March of this year. Now, if we bring this back further, okay, so let's take a look. Yeah, that's sticking out like a sore thumb. Well, we'll see what happens when it gets down there, because what that is also, folks, is that would be the consolidation that started out here going all the way back to the July of 2017. That's how that works out. So bottom line is that that wants lower price, and of course inside the NDX 100, that is what can get hit, and get hit pretty hard. You know, a couple of Tigers and Tigresses were talking in the den, you know, about the aspect that you still have the Dow Industrials higher, the small caps are getting down, NASDAQ is starting to go down, and the bottom line is what does happen is this, is that if in fact this is going to be a correction, the Dow Industrials as well as the NDX 100 and NASDAQ, it will come out of nowhere and selling will just accelerate. You know, what always blows my mind, not so much as the Dow Industrials. It seems that, you know, if we go back to any big downdraft, it's the banks that always go last. And when they go, forget it. Then everyone throws the towel in. But what does happen is that when the NDX 100 starts going south and the NASDAQ Composite starts going south, it seems that it can accelerate very quickly. And then you realize that, you know, an NDX 100, 100 and 150 points is a lot. And guess what? When you're going south, man, that elevator has no stops on the way down. Stay right there, folks. Coming back. Dow up 105, NASDAQ down 42, S&P's up 4. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's go over and take a look at GBTC. Now, GBTC, folks, this is the Bitcoin Investment Trust ETF. And the reason I want to get my head wrapped around this is that, you know, we always had a lot of folks that were, bottom line, calling on this equity. And on a continual basis, bottom line is that we were saying, hey, listen, man, you know, what you have here is that, yes, you have an ETF. And what you also have, though, is you have an ETF that is trading at a premium of over 50%, 50. This thing traded at one point about 65% premium. So it's like if you're going to buy Bitcoin, I mean, it makes much more sense just to buy it because at some point the premium will get quashed. Now, I hadn't looked at this in a long period of time, and I just brought it up. But I'll give you an idea. Right now, the premium on this has been getting quashed. And now you're still paying 17% more than you should. No, 14%. So it's down from over 50%. It's a 14% premium, but you can see that in that aspect, that means that, just to wrap your head around this, that means that Bitcoin, even if it stayed the same price, you'd end up losing that 35% inside of that because of the premium dilution. Okay, so you really want to understand premiums and the ETF structures when you're either buying them and or selling them, because this is a classic, you know. And if we take a look at it, if we go to December of 2017, just to give you an idea, December 2017, that's when Bitcoin was 19,500. This stock here was trading at a price point of $38. Bottom line, now you're at $7. So that's about, it's down 80%, right? Bottom line, you have Bitcoin, no doubt, down big, but you're not down 80%. You're down 60%. So bottom line, you know, 19,000 to 6, right? 12,000. Yeah. So bottom line is that you can see how your money can just go poof in a second if you, in fact, are not turning around and paying attention to how these premiums actually work. And that, by the way, we've seen a few of them, but that is unusual when you get a premium that is that high. And for a long period of time, it looked like the premium was never going to go away. But bottom line, guess what? It always goes away if the bottom line, I was going to say the ETF gets bought, but the bottom line, even when it gets bought, that's when it goes away, because what happens is that you're only getting paid for the share price versus what is inside the ETF structure. So buyer beware in a huge way, Let's go over and take a look at the XAU, the HUI. If we take a look at the XAU, these are going to have some nice volumes in them tonight. In fact, we'll do the GDX right after this. We go take a look at the XAU. That's up $1.90. That's trading into the downdraft of the 15th of August, and that's what we needed. Bottom line, anything inside the $65.71 says it wants higher price. We go into the Gold Bugs Index, same setup in the Gold Bugs Index. Gold Bugs Index is digging into the 138 in a big way. We're at 146. That's a big number, man. That's a big number. And what we are going to have inside both the XAU and the HUI, and this will pick up more buyers. All we need is one more day of the type of trading that we have out here, and you would have, well, this is interesting. The XAU tonight actually will show up in some screens. The XAU tonight basically has jumped over its 50-day moving average. So that will finally show up in some machines. HUI hasn't done it yet. Let's go take a look at the GDX and see how we set up in the GDX. GDX volume-wise, oh, this would be sweet if we get an ABC up. 1 second. 1911. Oh, this is, oh, if we could get, this is wild. If we could get a few more pennies inside the GDX is setting up an ABC structure on the way up. Bottom line is that it's barreling into the swing point. The swing point is 45 million shares. We have 46 right now. And this is what happens, folks, in the GDX. At the close here, we're going to get a good 15 million shares in. You know, we could get more. If we had the price, it'd be great, because then this would be a large ABC. The A point on this is 17.28. The B is 19.10. You get $2.80. That's going to give you 21 bucks. And $21, man. Oh, make sure I get that right. Yeah, 21 bucks. 1 second, hold on. 17.28. $1.80. No, 20 bucks. 20 bucks. I knew 21 was too sweet. But 20 bucks will do it. 20 bucks, get some real action going. Because what you have done is that you're digging into this August 15th area. That August 15th area is the downdraft. And then what you'd have set up here, man, this is pretty intense, actually. This symmetrically, this would be, and I haven't seen one of these in a long time. This would be one beautiful head and shoulders bottom. Your right shoulder is set up. Your left shoulder, if we're looking at the chart, your left shoulder is set up from August 15th, going over to the 28th. Your head goes right down to the 11th. It looks like a nice cone head. Bottom line, you shoot up again. You go sideways. Symmetrically, it's almost there too. Like at what? 3, 6, 9, 12. 3, 6, 9. It's a good setup, man. So it's going to get intriguing out here, seeing what the rest of the analysis was, because what Goldman didn't, well, you know, we'll see what analysts actually come out and basically made this note. The bottom line is that the market did pay attention to it. The GCZ8 and inside the note, the note wasn't saying that what you had is that that they thought the dollar was going lower. What the note had is that the aspect of gold that had got smoked, they thought it was done too far. They thought that risk was on the table, particularly in the EM countries, and that's what they saw as to. And they basically brushed off interest rates going higher. They're saying that, well, gold can go higher simultaneously. So now that's basically you get a couple stories out here about Italy. You know, we'll see how the whole thing shakes out. The bottom line is this: gold is such a small market, folks. You don't need a lot of buyers inside this market once it gets going. And once it gets going, if you've been in this market, you know that gold can be a little rocket ship, as well as the equities. They take off, and when they take off, man, they take no prisoners. They go straight up, and we'll see whether an Eco Eagle right now is a confirmed ABC up. We'll see if the GDX can get 19 more cents, that'd be a confirmed ABC up, because what we do have is the volume. Stay right there, folks. Come right back. Dow Industrials up 131. Nasdaq down 36. S&P's a flat. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 136, Nasdaq down 35, S&P's off 1.5. Let's go just take a look at. So I want to take a look at these volumes, so you're going to be able to see the type of volume they're going to put into the close. Just keep this as a heads up. Look at this. The GDX, you're at 48 million right now. Bottom line, you're going into 45. But that's not the closing print. We're going to see a lot more than that, but we'll just keep that in mind. On the GDX, we get 48 million. With 6 minutes left, and let's go to the IWM, because both of these ETF structures, they love putting monster volume into them at the end of the market. So the IWM, we got 23 million. Where am I? 23 million. IWM. And we'll keep an eye on that. The IWM bottom line is already got 23 million. You're coming into 20 million. IWM looks like to me like it's going to be fast and furious down to this 162. If you break that 162 level, then you're going to see some real downdrafts happening. If we go over to the 3 Qs, we take a look at the Qs. Now here, this is pretty cool, folks, because what the Qs did is actually try to get the higher price and have light volume. I love it when that happens. Why? Because it's really hard that when you have separate tests, that you have the one indice going down, has the confirmation as the volume-wide price spread. Another indice try to get the higher price, and yet you still have light volume. That is actually harmony in the marketplace. That's harmony in the marketplace. That the NDX wants to go south, the small cap is going south. Bottom line, Dow Industrials, Dow Industrials basically have not rung the bell yet. That's how this is shaken out. That's up 143 points. Bottom line, you get 30 stocks. It's great if you're in the Dow, but guess what? Other than that, you get a lot of equities that are going south. And if we go over to the composite for a second and just take a look at this composite, we'll do that in the next hour. Stay right there, folks. Lots of numbers coming out after the close. We have the Dow Industrials up 140, NASDAQ down 35, S&Ps are flat. We're going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Get our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials traded up 122, NASDAQ down 37, S&P's flat. Gold contract up $15.20, traded at $12.06 an ounce. Silver up 19 cents, $14.70 an ounce. Now, both gold and silver, folks, caught a bid. They have wide price spread. They have accelerated volume. Silver actually took out the bottom of its consolidation. Gold, bottom line, I expect you're going to get higher prices out of this. We'll see how the 12.18 to 12.20 area line up. That's where gold has a big supply line. That's where the sellers, they've been sitting there for a long period of time. We'll see how they handle it when we get up into that area. Light sweet crude, $75.16. Big numbers in the light sweet crude market. Flat today, but still big numbers. Notes and bonds, higher price, lower yields. You have the 10-year note up 6 ticks, 118.27. 30-year bond up 19 ticks, 140.19. King dollar up 166 ticks, trading out at a price point of 95.095. Now, when you take a look at King Dollar, you have 26,000 contracts, good contract volume. Bottom line, though, it didn't hold price. You know, it was trying to get into this 95,280, which it did. That was the swing high that was established out here on the 4th of September. Got into it, failed. You know, we'll see how this shakes out. What kind of a back down we get out of this. Notes and bonds. Bottom line, notes and bonds want higher price. What we have with the 10-year note, the 10-year note right now is yielding 3.05. If we go over to the gold contract and take a look at gold, what you're going to see is this. Gold had the price spread, had the volume. This is all about Goldman note coming out this morning. Bottom line, I've done the gold report since 2000, and I think it's 2000. Maybe 2001. I think it's 2000. Bottom line, I can look at the first edition. I actually have the first edition. Bottom line, folks, I don't think I've ever seen Goldman come up positive in gold. They were out there this morning, and they juiced it up. We've done 349,000 contracts. You went from 1192 to 1212. You closed out at 1207. And bottom line, we'll see how it's going to hit this at 1220. If we do look at the GDX, what's encouraging here is this. The GDX is coming into its swing point. And look at this. They put 21 million shares. We took the numbers right at 4 minutes of 4 to see what they put into the GDX at the close. 21 million shares they put in. You're going into a swing point of $19.10. We closed at 1907. You have done 69 million versus 45. This is telling me we're going to do an ABC structure up. And if that's what we got some action, because what you're going to see inside the GDX is that would throw it over the 50-day moving average. That would end up showing up on more machines. If we do look at the XAU, what you're going to see is that I believe this did finish over the 50, which will throw it on more machines. Yeah, it did. And the XAU is going to have volume. The XAU is going into the highs of 1212. Oh, 1 second. Hold it. XAU. Index. Okay, so the XAU closed at 66.98. No, that's not over it. No, not even close. That's not over it. Okay, so it's coming into the swing. Bottom line, we'll see what kind of volume we do have coming into this swing point. Gold Bugs Index also caught a bid out here today. They all did. The gold and silver equities, they caught a bid. You do have that's up $5, 496, 146. If we go take a look at Anico Eagle AEM, you're going to see this is a confirmed ABC structure in the way up. Blew away its B point. Its B point being $35.51. You closed at $35.84. You did volume out here of 2.9 million versus 1.6. Nice setup, man. Your A point on this is 32.18. Your B is up at 35. So you get a small one. It's $3.20. But that would get that up to $36.40 and $36.40. Now you're talking some action, because that would get you over the downdraft from August 15th. The downdraft from August 15th, folks, is a big number. And it looks to me like you've set up technically you set up a really sweet ABC, head and shoulders at the lows. So pretty cool move. Small caps, they took small caps to the cleaners once again. And we had done the volume on the small caps too. That was 23 million coming into the close. They put another 5 million, 28 million. So bottom line, they're selling into the small caps also. Yesterday we did 27 million. Today you did 28.2. That's after making a high out here, folks, of 12 million. You can see the correlation. Price, volume, you make highs of 12 million, you go down with 20. Guess what? There were no buyers up there. People gave their money. There's no one in the store. See ya. Don't want to be ya. What you can expect now on the small caps, and the small caps are leading us down. That's the bottom line. You can expect 162 tomorrow, 26. If we got the same type of volume that we got today, that would be pretty intense, because then you would be basically breaking with conviction a consolidation that started out in May of this year. You know, this has been a long time out here. And what you have had, though, inside this indice is that all the lows have high volume. The highs have no volume whatsoever. And that's an indication that it does want lower price anyway. Let's go take a look at First Majestic for one of our tigers out here. So First Majestic was up 15 cents, 2.9 million shares. The good news is that you had 2.9 million shares. You're going into 3.4. Look at that. You get a seller at $5.95. This battle's not over yet, man. That's the bottom line. You can see that this hit it right to the T. It hit 597. Last time we hit 597, went from 597 back down to 537. Gave it up on price. You got volume in here, Mike, as it's pushing. But that is saying it could back off a bit. Kind of psycho. But that's how the stock likes to trade, too. You know, if you're trading gold stocks, folks, gold stocks, some of them trade like common. Most of them trade a little bit different. They got a couple quirks about them that you want to really get your head wrapped around. Stay right there, folks. Look at our man, Mr. Jason Path, coming up next. Following with us. Don't forget, folks, Jason kicks us off every trading day right here, 8:30 in the morning. Morning market kickoff. Outstanding show. Jason and I are coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished up 122, NASDAQ down 32, S&P's up 1.5. Let's go over to our man, Mr. Jason Path, as we do each and every Tuesday at 20 past the second hour. Don't forget, folks, Jason does an outstanding show every trading day right here, 8:30 to 9 Eastern Standard Time, morning market kickoff. If you want to understand what is happening in the marketplace, what you want to be looking for in the day, on his Monday show what you want to be looking for the whole week. Runs it down. Great program. He also has a great newsletter, folks. And the way you can get this newsletter, you come over to our website at TFNN. You're going to see right in the front page, featured content, the quantitative edge. You can hit that button. Bottom line, you can take your choice. You hit subscribe, and whether it's a monthly, 6-month, or a yearly, it all comes with a 30-day money-back guarantee, folks. Check it out on the front page of TFNN. You won't be sorry you did. Believe me. Jason Path, what's going on, brother?
Not much, man. How are you?
Doing great, man. Yourself?
Awesome. Doing really good. It's a good day.
Cool. It's a good day. And, you know, we got a little divergence out here. It's intriguing, right? You know?
That's right.
So, you know, what's interesting is that, you know, we had, I'm going to give them a few little hints. You know, we had good old Intel, you know, at Lowe's yesterday, and all of a sudden, I know you were looking for a nice little pop. And in fact, let's see, the Intel AMD ratio is at a historical and unsustainable low. I like it.
That's right, man. Put that trade on Monday morning. Long Intel, short AMD. You know, we track relative value in a lot of key areas. Looking at some relative value trades with oil. Hope to have that teed up for tomorrow morning. You know, there's a lot of interesting, and I think you mentioned this even yesterday on your show. A lot of interesting interplay between oil and the XLE right now, right? You know, why isn't the XLE rolling when oil's up around 75? I think there's some arbitrage opportunities there. That notwithstanding, let's get back to chips. You know, the ratio between Intel and AMD. To the point, the words in the newsletter, is just unsustainable. You just can't have the 500-pound gorilla continue to be that underwater in relation to what is still, you know, a relative upstart in AMD with the 200% rise. And, you know, we like long-short trades in those situations where they both take off. We still got a hedge because we got one long, one short. You're just arbitraging the difference. You know, clearly the timing set up nicely with the analyst note overnight, but the reality is the analyst note came out because the ratio is just too stretched. AMD historically, if you put up, you know, a 10-year monthly chart where they were on the RSI, where they were on the run that they had and the peaks that they've achieved, it's always ended in a very nasty and violent fashion for this stock. This is not atypical if you take a 10-year view, and we thought we were at one of those 10-year peaks coming into this week. And sure enough, you know, they're down 7.5%, 8% today. You know, we put a trade on around 32, and you know, it happened probably a little sooner than I expected, no doubt. And there's still upside in Intel. You know, we got the CEO situation out there. That's good for a nice 10, 15% bump. So a lot going on in chips, but we just like this ratio really to re-expand. It was at 5 earlier in the year. It was down, you know, getting close to, you know, closer to 1. And so we still think there's significant upside as Intel recovers a little bit. It was a little oversold. Clearly the AMD story, but you know, we're getting we cover chips, and folks are asking us, you know, what do you think about AMD? And you know, the way we like to play those trades is instead of timing the top on AMD, let's pair it with Intel. Yeah. One's overbought, one's oversold. Give us a little protection on either side. And clearly, you know, it's been a pretty exciting 2 days with that trade.
Yeah. So I'm just gonna go over this again for the folks, because this you know, there's no doubt you hit it right on the nose. But it's so what I love about it is that, you know, you're a data freak, so it's perfect. Do you know what I mean? Mm-hmm. That, you know, like I look at things technically all the time. You know, it was oversold, but as you just said, it just makes such common sense. But you had the data behind it, okay? Mm-hmm. And what you had here, folks, is this. So check this out. You know, if you're just looking at the chart, bottom line is that, you know, yesterday Intel go down a little. Today it takes a swing point out. Takes it out with volume. That's saying today, guess what? Now you get game, let's see, the bottom is 40, 45, 47. Yeah, it's game now to fill the gap, okay, which is like 51, and you're at 48. And then if we take the other side of that, folks, okay, and AMD, bottom line is that this, you know what's interesting about AMD, Jason, also, is that this had finished a stretch ABC structure on the way up on the 13th. Okay, of September. And what happened there, folks? It goes south. And, you know, I was always wondering, like, when AMD, like, how did AMD go so high and Intel just couldn't move. It's like, oh my God, it's hard to comprehend. You know what I mean?
Mm-hmm.
In my case,
absolutely.
it was anyway.
yeah, absolutely. And you know, again, the thing about a relative value pair trade like that is, you know, maybe it's this week, maybe it's the next. You can't ever time exactly when the market needs to wake up, but because you have them in tandem from our point of view, and this is a you know, a typical quant strategy, right? A relative value trade. At some point, that will have to reconcile. Again, we're teeing up, looking closely at some opportunities, for instance, in oil, between the XLE and the oil. At some point, that'll have to be reconciled. If oil's going to stay at 75, the XLE will have to catch up, or vice versa. But you know, the thing we love about AMD, you know, folks, we get a lot of questions about AMD lately. You know, if you put on a monthly chart, we've seen this move before, and then you put on the monthly chart and you pair it, you know, just a couple of overlays, the ratio with Intel, the disparity there, we know at some point this had to come into correction. So, you know, and you are. Yeah, similar trade, you know, to a coffee. You know, we've you know, folks will look at a chart of coffee. It's been a brutal bear market. When you pair it with the real, you know, it really clears up for you. The coffee's been under pressure due to the real, and that situation has to reconcile at some point. We've seen the real come down as the situation politically has cleared, and coffee a nice pop. You know, I've been calling the BJO up pretty consistently. We're up 6.13% today. Couldn't say that today, Tuesday, that the market would wake up, but, you know, over the last couple of weeks, we were very confident we'd get a nice pop in the BJO, and you wake up today and you got 6% of upside. And as you know, with coffee, man, that market can rip once it gets moving in a direction. So that's another market. I think there's significant upside. I like the real down to 370 as the election comes near. That can put you at 120 to 140 on coffee futures, and, you know, again, a lot of upside there. But you see these historical just disparities. If you measure it within a 5-10 year period, you knew coffee and the real couldn't stay in their current relationship. That market would have to correct, and we started to see that pop this morning.
And you know what's so cool about the commodity structure, of course, is that we know, and we talked about this before, it can't go on, well, it can go into the price of production, but it can't stay there long. Because guess what? Then none of us will wake up in the morning because we won't have any coffee.
That's right. Yeah, these are self-correct. That's the beautiful thing about commodities, man. These are self-correcting markets. You know, stock, you can get some speculation, and, you know, the valuations can stay out of whack. But it's especially in a developing area, so reliant on that commodity like Brazil. That thing will get corrected, and when it happens, it's very violent.
And, very you know, when we're talking, coffee today, folks, was the best performer in the whole commodity index. I mean, you're talking about, I believe it's like 5.5%. Monster number, you know.
This is quite a day at the quantitative edge, Tom.
Yeah, I know. Congratulations. It's awesome, man.
You know, we've been playing pretty close to the vest, but, you know, good day of coffee, good day of chip.
Yeah, just stay there. One more segment, all right?
Sounds good.
Folks, and as we take a break, come over to our website. You're going to featured content, the Quantitative Edge. You won't be sorry, folks. An outstanding newsletter. It comes with a 30-day money-back guarantee. Check it out. Jason and I are coming right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Jason Patz, Tom O'Brien, we do appreciate your growling and prowling with us out here. Don't forget, folks, Jason kicks us off every trading day, 8:30 to 9 o'clock. Just go to YouTube, put TFNN. You're going to hear a great program. In your newsletter this week, Jason, I know you didn't, you got something on your radar, and I think on this radar you're talking about everyone would like to know housing stocks, mortgage rates. Tell me what you're thinking out here.
Yeah, so housing was a solid performer, and it was really closely correlated with the S&P through the first part of 2018. And then we hit 4.5 on the mortgage rate this spring. And if you look at a chart of Lennar or the ITB, we track both, it started to break lower, and the correlation immediately decoupled as we hit 4.5 and started to separate. Challenge for housing now is we're at 4.72. I think we're headed to 5 by the end of the year, and the data has been choppy. A lot of analysts will say, well, the market can handle 4.5, maybe even 5. The problem is we have unexpectedly choppier data. 2 months in a row of lower new home sales. It did get a bit of a bounce in August, but I think this 4.5% mortgage rate has hit housing harder than it has in previous cycles because the data is softer earlier. And speaking specifically to home construction stocks, so we saw that deviation start in April. It's really accelerated down. KB released last week. They were under pressure. Lennar's tomorrow. We're really looking closely at a couple of potential trades. The ITB short has certainly gotten some momentum to the downside lately, and if we get to a 5 on the 30-year here in the fourth quarter, I think it's just going to be a very, very, very challenging 2019 for home construction and housing in general.
Yeah, no, I mean, that's why I think it's so important to, what you're going through, because, bottom line, I mean, all of us are into it. I'm into it in a big way. And what gets intriguing is that you have that aspect. Then you have the aspect that housing has gone up so dramatically, like the affordability, on the other side. And, something came out yesterday, and this is so true because I know I have a couple mortgages that are only, I was looking at it, man, I get like one laying out there, 2.85. I mean, and what the article was about is that, well, you think, people would never sell that house, and I won't. You know what I mean?
That's right.
Because it's a rental anyway, but it's like 2.85. Is that, you kidding me, man? You forget going back how inexpensive it was 7 or 8 years ago. Do you know what I mean? It's like, oh my God, like, why would I? I mean, when you start doing the actual ratio, it's like pretty intense, man. So
that's right. I mean, historically, and you go back the last 50 years, 5% is a pretty good deal on a mortgage.
Oh, yeah.
That's why I think some of the analysts' data right now is honestly trailing a little bit the current phenomenon, because if you put it into a historical multi-decade model, 5% looks pretty innocuous. But to your point, psychologically and with stretched valuations, as we see in some places, 5% is a huge number. It's 2x, what some folks, to your point, entered the market in, are a little less than 2x. Yeah, I had a mortgage, in D.C. at, Washington D.C. at 3%, and anything to me even above 4.5 just seems very expensive at current valuations. And I think it's a significant headwind, especially on the construction, the new side of real estate.
No, there's no doubt. And I think picture this. I've seen 3 real estate crashes, folks, okay? The one that happened in '89, wiped out basically Boston, wiped out Orange County, wiped out Florida, wiped out Alaska, wiped out Dallas. But the rest of the country was fine. But I was doing some numbers. My cousin just sold a house, right? So check, this is in South Boston. And the way I always look at housing in general is that most of the time, if they cash flow, that's great. After they stop cash flowing, it takes about 2 years that people just hope that they buy a house, they can sell it to someone else and make money, right? But listen to this number. This is a sick number. He's getting $900,000 for the house, single family house, right? Gets $36,000 a month rent, right? So when I look at that equation, I'm saying to myself, man, that's amazing, okay? Number one, but I can do the same math. So watch this. If you want to see what the differential is, folks, and this is what I mean, that Boston, New York, San Fran, they're going to take hits, man. I suspect they're going to, and this is why. I have plenty of places that are renting at the same type of number, right? Those places are only worth $500,000. That's the most I could get for them. Isn't that intriguing? Do you know what I mean?
Yeah, absolutely.
So cash flow wise, when I got the numbers, I says, you got to be kidding me, man. Like that's, but I think, I like your work, man. I think this is something, that everyone has to be on top of, because, it's going to be tricky in the aspect of how fast these rates go up, and literally, where that 30-year goes, because we all buy real estate with our hand, with our signature. That's the bottom line, Yeah,
that's right.
And then what has happened on top of that, I just got all the tax bills. So the tax bills have also gone up because not that the taxes have gone up, but the assessments have gone up, okay?
That's right.
And people are going to get hit with that, so it's going to be intriguing, man, watching this thing shake out.
That's right, man.
Yes, it's going to really have to do, so now let's talk about bonds, I mean, it's intriguing because it seems like they like to keep coming back, right? I mean, the 10-year is going to be, it's like, okay, is this it? Is it, is this the last hurrah for the 10-year? It's trying to basically get some juice behind it, 118.26. I mean, we're only slightly off the lows, but.
Yeah, I like yields to come in through fourth quarter. That's our call, and it's certainly, we've seen some expansion lately, but when we got to 310, I thought that was about the limit, and we've seen them come in. To your point, we've got support there. I just think as we move through fourth quarter, there's so much risk on the table. And, geopolitically from a macro perspective. And I do think those yields come in from here, slower global growth. Another note we had in the newsletter, just correlating rates of inflation globally to the 10 and the 30-year. That's a pretty strong, half-century type trend that we're falling in line with. And again, a simple model on global inflation. We use a copper as a proxy for global growth. Use that as a model against the 10-year. Everything's pointing to us to a 2.6 to 2.8 on the 10-year. Clearly, we're beyond that. I don't know if we come all the way back to that. Back in August, we were at 2.81. But I do think we move in that direction from here.
And that would help the 30-year. I mean, that's, that would save the housing. That's the bottom line.
That would help. Yeah, at least add some, but part of the challenge on the housing is, it's a trend. It's not necessarily the snapshot in time, right? It's just a trend continues to move. 4 or 5 middle of the year, 5 by the end of the year. But I think there's support under bonds at this level. I do think we come closer to 2.8 by the end of the year. Something's got to give. I mean, equities can't continue to rip to new record highs, expensive dollar, low global growth, and high yields. Something in that equation is going to have to blink. Something's going to have to correct as fast as yields have moved. And I think yields is what corrects. I think yields come in.
Folks, you want an outstanding newsletter? You want a Harvard education with MIT thrown into it? Actually, with a great football player? Get over to our website at TFNN. Go featured content, the quantitative edge. It's a beautiful thing.
You're too kind, sir.
You have a great one, a safe one. We look forward to the show tomorrow. Thanks, man.
Talk soon. Take care.
Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. So Mattress Firm, folks, we see them on almost every block. Bottom line, they're going bankrupt. They had a couple different problems. They had the problem, they had an accounting problem with their main firm, and they had an accounting problem inside Mattress Firm. So we'll see where this shakes out. Bottom line, it's been trading 13 cents, but that's pretty incredible when you see an equity that has gone up so fast over the course of years, and then it just implodes. They went from supposedly doing 8.3 billion going up to 10 billion, I believe. Let me just look at this for a second. Yeah, this is the equity that I have up here. Mattress Firm actually what ended up happening once they had got bought out, they got taken over by a South African firm, and they literally both got taken to the cleaners in a huge way. Let's go take a look at the oil numbers. Oil numbers just came out, API numbers. Oil out here, let's see what we have. 1 second. Okay, so stockpile-wise, we had a Cushing. We had a build at Cushing of 2.2 million barrels. Gasoline, there was a drawdown of 1.7 million. Distilled, there was a drawdown of 1.2 million. Bottom line is that it's not moving oil whatsoever. Oil just doesn't want to basically get into lower price. If we do go over and we take a look at the unleaded gas as well as the heating oil, first we'll do unleaded gas. Unleaded gas right now is trading out at $2.12 wholesale, folks. Big number. Went with volume, top side, and of course this is going to affect all of us. So let's see. XB1. Let me start this. XB1. We'll put this on a continuous contract, get a better idea of what we're looking at. Oh, it's intriguing, man. Okay, so unleaded, you know, we're 212, 218 is game. That's what it looks like. And yeah, you can make the case actually that 228 is game. 1 second, let me put this closer. Yeah, it is. So unleaded 228 is coming at us. That's a big number, man. That's unleaded, wholesale rather. Now, distilled, and this is like I feel for you folks. Bottom line, that whether you're heating your house in the Northwest, the Northeast, this is a big number. This heating oil, you know, this is a big number, man. I mean, heating oil in 2 weeks has just gone wholesale from $2.19 to $2.40. When I take a look at this and I put this on a continuous contract, okay, so let's see what this baby is doing. You want to get your tanks filled up, folks. This is not a good scene coming into the winter, I can tell you that, the way this is just set up. Yeah, so, yeah, this is scary. So this is what you have. When we go back to 2014, folks, because we came down so fast and furious, what had happened, heating oil, we came down from 337 straight down to 158. Now, what we just did is that when we launched last week, we went from 219 to 236. We launched the swing points. So it's like there's no reason that this can't go to like 272 to 290 in a heartbeat, because there's nothing in between it. There was no bases in between this because of the way we come down so quick, and that's always a real problem. So bottom line, you know, I know if you have oil, you get a couple, you get one tank with 300 gallons, or a couple with 300 gallons. It's big dollars, folks, and I wouldn't hesitate, and I'd get those baby filled as fast as possible, because it looks to me like it's going to be a long winter, and if it's a cold winter, then you're talking about a whole different ball game out here. There's no doubt about it. So what you also have out here, so on the let's see, Tempur-Pedic, T-E-M-P. What you're going to see is that because you have the Mattress Firm going BK, Tempur-Pedic right now, they closed at $48. That's trading at $52. You know, so that baby is up pretty good. What I expect you're going to see is this. This is where all these places are going to have a problem, because what you have is that good old Amazon, folks, is in the mattress business in a big way. And, you know, you've probably seen a lot of the ads, you know, mattresses and boxes, all of the above. There's a huge amount of cash flow in mattresses. There's a huge amount of spread in mattresses. I think the spread's 57%. Big number. That is right up the alley of Amazon to crush that spread. They already have the delivery mechanism out here. I suspect all these mattress companies are going to have to bring down their profit, and we'll see how fast it basically gets crushed. We go take a look at some of the higher volume equities out here today. You have Facebook down 311. Facebook trading 159. That's on the way to 149 rather. GM was down 90 cents. You had Oracle off $1.57. Stitch Fix, that was the monster of the day on the way down. That baby got destroyed. Came out with those numbers last night. This did an IPO at $15 approximately a year and a half ago. Did a rocket ship up to $52. Pulled back to $40 last week. Did a counter trend bounce to 45 and then just blew apart when it came out. The numbers were fine too, by the way. It's the growth aspect that looks like that it wasn't. This opened today at $34 and just kept going south. Monster volume. Now what we have is this. You have volume off the high inside this market, and that's a huge problem. Huge problem. Folks, if you haven't test-driven or you would like to test drive the gold report, bottom line, come over to our website at TFNN. You're going to go into featured content. You're going to see the gold report right there. It comes with a 30-day money-back guarantee. Bottom line, this was with gold, silver, they both caught a bid. You have AEM doing an ABC structure on the way up, blew its B point away, blew it out with volume. We'll see whether they get more follow through in these other equities, but that's a good indication that we get higher prices coming at us. Royal Gold, RGLD, that's going to need a little more volume. Royal Gold did 508,000. Okay, volume came in at the end. They put the volume in at the end. They did. So Royal Gold's also going after its B point, and it has some juice behind it. The B point being $79.52. The GDX, I expect what we're going to see, it's going to go after it tomorrow. The GDX monster volume, we did 70 million shares in the GDX. Swing point is 45 million. Price point is $19.10. We're at $19.05. That also wants higher price. And all of these, folks, what they're trying to do is this. They're trying to get through the August 15th downdraft. That downdraft was a vicious downdraft. They're making it through, and they're making it through its volume. So the probability is that we're going to go. Dow Industrials finished up 122. NASDAQ down 37. S&P's flat. We're coming.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We go over to Amazon, and Amazon right now trading at $19.71. And bottom line, folks, we're going to see this coming into the holiday season. Bezos today, bottom line, says he's going to pay $15 across the board to anyone that's working for Amazon. It's great for the amount of people that there's already 575,000 people that work there, but Amazon will employ another 100,000 coming this holiday season, come right now, basically. What's intriguing here is that the rest of the Targets, the Walmarts, we'll see where they stand, because many of these companies are in the exact same markets that Amazon are in, and in both cases, they pay $12 an hour. So you're out there. Guess what? What that is saying, number one, is that that's saying Amazon is going to get the workers, and because that differential is quite a differential. And what does happen is that it's just not the differential of the $15. It's the differential of the time and a half. 15 gets you 22 and a half. Bottom line, that's when you start pulling in some bread versus the 18. So you can see when you're talking about holiday help, what ends up happening with holiday help is that, yeah, you have a base, but the bottom line is that most times everyone's busy and they can push in some overtime. So I suspect this is going to be the beginning of the battle of the aspect of where minimum wage is going, and the bottom line, it's going to go there. Why? Because of supply versus demand. It's going to be all about, we're buying stuff, they got to get it out the door, the demand is there. Now the question is, can they service the demand coming out the door? And we're going to basically see this in spades. We go take a look at the market out here, what you can expect out here. Bottom line, folks, the yen. Let's talk about the yen for a second, because the yen, we'll see whether this is topping out at the 114. What the yen did out here is to hit the 114. You do have a swing point up there. It took the swing out, but just barely. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step in, or take ownership. Have a great night, safe night. Look forward to speaking right back here, 8:30 tomorrow morning. Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.